This ICT Judah swing strategy shows up almost every single day, and you will become a profitable trader if you just follow the rules. I've simplified everything you need to know for this setup, as a lot of people are overcomplicating it, even though it's a simple rule-based RBO touch with time-based setup. I've also included 2 live market examples, both on Forex and Indices, so you guys should definitely stick around and watch till the end. But we gotta watch the rules first, and the theory to understand the live market example, because it's very easy to backtest, and it's a very consistent strategy. This is literally a full crash course, a full trading plan on everything you need to know for this setup. Let's get straight into the video.
So for Forex and Indices, so the Forex, there's 2 time windows that we're going to be using. So in New York time, it's 12 AM to 8:30 AM is the first time window, and the second time window is 8:30 AM to 11:30 AM. And in London time, it's obviously just here, same time window, whether this is just in London time. The same thing for Indices. However, there's a 1 hour difference. So the first window is from 12 AM to 9:30 AM instead of 8:30, so it's just a 1 hour difference there. And then the second time window is from 9:30 AM to 12:30 PM. Okay, and the same thing for the London time over here. So there's 2 time windows. What we're going to be using the 2 time windows for. The first time window is going to be for the accumulation phase, where we're going to let liquidity be built up on either side of the market, both highs and lows. Okay. And then the second time window is where we look for the manipulation and distribution to occur. We're going to be entering after the manipulation leg has occurred, just before the distribution leg, and I'm going to show you on these examples and the live market examples also. So the time frames we're going to be using are the 15-minute and the 1-minute time frame only. It's literally very easy. The pairs it works best on for Forex is Euro USD, GBP USD, and AUD USD. ICT himself recommends these. And for Indices, it's NAS 100 and S&P 500. You guys can practice this yourself and see what works best for you. Whether these, for my testing, these are the pairs it works best on for Indices. Now, the setup, we're going to be trading the liquidity sweeps, the market structure shift, change of character, break of structure. This is essentially all the same thing. However, they all have one thing in common, which I'm going to share with you on the live market examples. And then we're going to look for the entry of the fair value gap, extreme consequent encroachment, the earliest fair value gap, which one? I'm going to show you that also in the live market examples, okay? Now, let's get into the theory side first. So as you can see, first example, and this is literally from today, so Friday on Euro USD, you guys can practice this yourself. So let's get into this example. So what I've done over here is I've marked out the New York midnight time over here, and then I've marked out the 8:30 price over here because we're on a Forex pair. So 8:30 AM and to 11:30 AM. However, I'm going to get rid of these 2 because the session indicator that I've got will actually show it up. And all I've done here is mark this out with a rectangle over here. So from midnight to current price right now on the 15-minute time frame. As you can see, price was in a downtrend because price was making lower highs and lower lows. Price is quite obviously moving to the downside. So we could be looking for sells, right? Sells are probable. So what we could look for is a liquidity sweep to the upside before moving in the opposite direction to the downside first, okay? So let's just mark out this liquidity point right here, this established high, a significant high at the start, like I said, and we'll mark out the low as well, because if price takes out this low, then we'll obviously look for confirmation to take the buys, okay? However, after this liquidity gets swept to the upside, what can you see right here? I'm not going to mention the name, however, it's a very basic name of the PD array that we're looking for over here, and I'm going to leave that to you guys in the comment section down below. You guys need to be getting this one right, okay? So let's wait for price to sweep liquidity in either direction. Okay, so as you can see, the 15-minute has swept liquidity, and all we do is go to the 1-minute time frame and look for that market structure shift. Okay, so as you can see, price is making highs and lows again and again. Okay, as you can see, some people would be faked out with this, saying that this is a market structure shift. Let's see what happens now. Okay, as you can see, price sweeps more liquidity from this high right here, and all we're waiting for is a liquidity sweep in the opposite, is a market structure shift in the opposite direction to the liquidity sweep. Okay, it's very, very simple. So as you can see, now this low has been taken out right here, and where is the fair value gap in the displacement leg? Very simple. The extreme fair value gap, which is the only fair value gap in this example, is right here. Okay, so all we're going to do is mark out our entries like that. We're going to put our stop loss, our entries at the bottom of the FVG because we're looking for sells, and our stop loss above the high. And as you can see, it's just above the first candle of the fair value gap, right? So you don't have to put it above the full highs. Okay, but in this example, you would just put it above the full highs because that is where the FVG is made up. And all you do is target opposing liquidity. Okay, all you do is mark out this area here, for example. And as you can see, this gives you almost a 1 to 7 with just targeting just the closest opposing liquidity. Okay, so as you can see, price taps into the bottom of the fair value gap. It doesn't tap into the 50%, which is why it's safer to enter at the bottom of the fair value gap. And as you can see, price runs away for more than a 1 to 8. Okay, let's see what it goes for. If you are targeting further levels to the downside, however, this is the low-hanging fruit, the main lows. And as you can see, it goes for more than a 1 to 10. You guys could pass your funded challenge in just this one trade right here. Let's get into the second example on the indices this time. Okay, so for the second example, we're on NAS 100 on the indices. We're on the 50-minute time frame. And all I've done again here is just marked out the time window that we're going to be trading. So as you can see in the first time frame, all I've done is marked out this box over here. And as you can see, liquidity is being built up inside this range. And as you can see quite obviously again, price is moving to the downside, making lower highs and lower lows. So it would be making sense for us to sell in this trade example right here. So as you can see, I'm going to just get rid of these lines over here because the session indicator will actually come up. And now all we're waiting for is a liquidity sweep on either side. So as you can see, there's a session low right here. However, we're not targeting the session highs in this example. Why? I'll explain in a second. There is an established high here, however, which is a liquidity high, right? So this is a significant high. Right above this high, we're in a downtrend, and we've also got this order block right here, okay? And this area of imbalance fair value gap, okay? Right here, just after the order block. So price is probably going to tap into this area and then continue down. So all we're going to wait for is the 50 minutes to sweep any direction, any liquidity. However, it's most likely that it will sweep the highs first because we are in a downtrend. So it would make sense for us to sell in this example, okay? So all we do is let price play out. So price has tapped into our area. And all we do is scale down to the 1 minute time frame and just look for that same confirmation again. As you can see, liquidity was swept over here. Let's see what happens now. Okay, we have another set of liquidity being swept right here. So now our market structure shift low has changed to this area right here. And all we're waiting for is a market structure shift, break of structure, change of character, essentially all the same thing with displacement, okay? This is not a market structure shift. This is not a break of structure or change of character. Why? Because price did not close below with a body, okay? Price has to close below with a body over here, and then we could look for that retrace and then look for the sells down, okay? So all we do is let price play out on the 1 minute time frame. We just got to be patient with this. So again, this is not a market structure shift. Okay, as you can see, now price has broken structure. However, there's no clear FVG in this displacement leg. So now, as you can see, there has been a fair value gap right here actually, just now, after this third candle, because an FVG is made up of 3 candles, 1, 2, 3. And again, you could mark out 50% and either scale into your entry over here, or you could just put your entry at the bottom of the FVG. However, because the FVG isn't in the premium of this displacement range, I'm going to put my entry at 50% so I can enter as close as I can to the premium of this range, because I do want to be selling high and then buying low, okay? Same thing, vice versa. And again, we just target the opposing liquidity. You could target these lows, however, because we are in a downtrend, price is most likely going to continue going lower, okay? Let me just get rid of this and then you guys can see how this plays out. So as you can see, price taps into our entry nicely over there, taps into 50%, more than 50% over there, retests and then goes down. Let's see how far price goes down. And you could literally just target the low-hanging fruit. This gives you an over a 1 to 3.5, and some people struggle to get this. It might sound like a low risk reward, however, this is very high, and over a series of trades, over 3 or 4 trades, you guys can pass your funded challenges, and you guys will become profitable traders with just this strategy alone. If you follow the rules, and I've literally given you everything you need to know, the full crash course, the full trading plan, and if you guys stick to this, you will become a profitable trader.
So that's it for today's video, guys. It wasn't very long. However, it is very easy to follow. It's a very easy system to follow. I've got all the rules, all the full trading plan for you right here. It's a full crash course. You guys should backtest this, forward test this, live test this. Let me know how you get on. Drop any more video suggestions in the comment section down below. Make sure you subscribe, make sure you like, and I'll see you in the next one. Peace.